Hey, Scott. Yeah, this is from the FHFA director, Bill Pulte. He is the conservator of Fannie Mae and Freddie Mac. He just posted on X, after significant studying and in keeping with President Trump's vision to make the United States the crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency as an asset for a mortgage. Interesting, in the note, he then has a release from the FHFA, whereas cryptocurrency is an emerging asset class that may offer an opportunity to build wealth outside of the stock market and bond markets. Cryptocurrency has not typically been considered in the mortgage risk assessment process for the mortgage from mortgage loans delivered to the enterprises without converting that cryptocurrency into dollars.
Something very strange happened with a post that the president made about cryptocurrency. That's like, if this happens, what else are you going to say? This could be exponentially explosive. Because when we go to the past and we're like, well, remember when we were skeptics about Bitcoin?
It's ridiculous.
Basically virtual currency, the same that you'd get for blasting aliens in a video game.
Well, you know, Hal Finney and all this stuff, cryptocurrency, and then you're like, Julian Assange in 2011, 2012 accepts donations in Bitcoin. What? Why would he accept Bitcoin? He does. Winklevoss twins, they like Bitcoin. Yeah, those are the Facebook guys, right? Yeah. Richard Branson likes Bitcoin. Richard Branson, Elon Musk in 2014, first time he tweeted about it. Then in 2020, 2021, he bought $1.5 billion of Bitcoin with Tesla. Bill Gates initially said good things. Now he's critical about it. Then you think about institutions when they came in. 2020, MicroStrategy buys $250 million of Bitcoin. What? Why would he buy so much Bitcoin? Then Morgan Stanley, then others started getting involved. Then BlackRock starts a Bitcoin ETF, 150,000 Bitcoins they buy. Dude, if all of these guys are now looking at this, maybe I ought to consider a little bit of my portfolio being tied to cryptocurrency. And then the president puts this on Truth Social. You ready? President Trump on Sunday announces that he wants to establish a crypto strategic reserve for the U.S. government, kind of like Fort Knox with gold. We're talking crypto. That will include things like Bitcoin, Ethereum, XRP Ripple, Solana, and Cardano. Whoa, the government wants to have a strategic reserve of cryptocurrency? They do. What's left after that? Is this a way of saying confirmation at the highest level that you ought to maybe consider getting into it? Maybe.
10 years time, you've got $1.8 million sitting in Bitcoin. You can now borrow up to 50% of the value of that Bitcoin. So you could borrow out $900,000 from the financial institution. And here's the benefit with doing that. One is you're not selling the Bitcoin. So you're still going to keep exposure to the market because it could still go up. And as you can see over that up to 20 years, it's going to go up to $32 million. So why would you want to sell the 1.8 million and miss out on the potential gains? So you keep the Bitcoin, and by keeping the Bitcoin, you now don't have to pay any capital gains tax. And by borrowing the $900,000 or up to $900,000 on that Bitcoin, that is a loan. So that is now not treated as income. So again, it's not a taxable event. So you're going to get the full $900,000. 10 years time.
Yeah, man, that's crazy. 40 days, God, I've been Swayze. Grew the beard out, that ain't shady. That's a bird, man, I ain't baby. Talking whole pie, that's so crazy. How I got a shot, raised the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady. If you ain't catch a double that time on the last rhyme, dog, I could help you. I got plenty more where that came from. When I brainstorm, I need shelter. It's enough water from the most high.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refi to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner Dale back in the saddle again for another edition of Real Estate Friday Live, y'all, man. I hope y'all doing well. Hope you had a good week, man. It's just your partner today, baby. It's me looking better than you. As I always say, take that damn picture and give it to your mama and them and holler at your partner. But guys, it's your partner today, man. Cliff is taking care of some family stuff for him as well. Be praying for him, guys, which is good. But, guys, this is going to be a great topic. Get your pens and pads ready for this one. This is probably going to be the probably most informative Real Estate Friday Live that I'm ever going to do. And it's on a topic that I'm pretty passionate about. I'm learning more about because of one word, leverage. All right. So do me a favor, guys. If you could, guys, like, share, and subscribe to the channel, no matter what platform that you're on. There's a little bell that if you could hit that thing for me if you don't mind. So whenever we come live, you get to come kick with your partner, man. And do me a favor, just share. If you could, guys, if you don't mind, and just like it for your partner. But man, let's dive into this thing real quickly, guys. Normally we dive into the current market analysis, but this is gonna be a little bit different today, guys. Man, I'm gonna dive right into our topic because it's so important, guys. Right now, here are our topics today, guys. Yo, I'm gonna get rid of this thing. Hold on one second, guys. I want y'all to see what's going down. Hey, remember we've been going over cryptocurrency for the last 2 to 3 weeks, guys. Could there be a $37 trillion crypto reset on the U.S. debt? What you say, Dale? Yes, so we're gonna talk about that today, guys. Number 2, how money is created. One word, debt. Let me say it with 3 words. Money is debt. Okay? Keep that in mind. Money is debt. All right? Money is not income. Money is debt. I know some of y'all legal egos are saying, no, Dale. Just hold on. Wait a minute. I got you. And crypto as an asset for mortgages? What you say, Dale? Now, we talked about the investor side. Now, what about the retail side? Don't you worry, your partner got you, baby. And lastly, because of all this, what are the opportunities for investors like you and I when it comes to real estate and using crypto with banking, guys? Ooh, this is going to be a good one, y'all. You can tell I'm a little excited today, guys. All right, guys, let's dive this real fast. The first topic, guys, real quickly, I'm going to make sure I do it really, guys. Let's look at real quickly how money is created, okay? How money is created. This is really important because I'm going to say something very controversial, and I said it up front. Money is not income. Money is debt, okay? Money is debt. Let me tell you why. We're in a debtor nation. Okay, a debtor nation, right? Money is debt. You've been lied to if you've been told that money's income. Yes, a lie. It is a lie from the pit of hell. It's a lie. All right, guys, let me prove to you real quickly, guys. I want to bring in my partner real quickly, Mike Maloney. Some of you guys may not know who this is. When I say he is a legend, guys, he's going to walk you through how money is created, and then I'm going to prove it to you with my commentary. All right, let's get into it. Let's dive into this thing, man. Get your pen and pads. This is good. Let's get it.
Every modern society creates currency in pretty much the same way. But since the US dollar is the majority of the world's currency, I'm going to use the United States as our example. It all starts when some politician says, vote for me and I'll make sure the government provides you more free stuff than my opponent will. But there's no such thing as a free lunch. So to provide that supposedly free stuff, the politicians vote for the country to spend more than its income. This is called deficit spending.
Right there.
To pay for that deficit spending, the treasury...
Let's stop right there. Deficit, guys. The root word for deficit spending is deficient. The root word for deficit spending is deficient. That means not enough. Okay? Understand terms. Not enough. So when you hear a politician say, hey, we have deficit spending, that is an oxymoron. That means not enough. Okay? Let's keep going, guys. Let's keep going. Here we go.
Treasury borrows currency by issuing a bond.
So
what's a bond? If you think about it, a bond is really nothing but a glorified IOU. It's a pretty piece of paper with numbers printed on it that says, loan me $1 trillion today, and I promise over a 10-year period, I'm going to pay you back that $1 trillion plus interest.
Hold on. Let's go back. Let's
Promise over a 10-year period, I'm going to pay you back that $1 trillion plus.
Stop right there. Let's go back real fast. A bond is what? It's a glorified IOU. That's what it is. The first word there, it says loan. Why didn't it say income? Why didn't it say money? It said loan. Let's keep it going now. Here we go. Hold on.
today, and I promise over a 10-year period, I'm
Now we have a time frame now, 10-year period. 10-year period.
going to pay you back that $1 trillion plus interest.
Plus interest. Plus interest. So we have loan. It's a bond. It's a glorified IOU. It's a loan over a 10-year period plus interest. That's called debt. Hello, McFly. Hello. Let's keep going. Let's keep going, guys. It's going to get gooder. It's going to get gooder.
But what you need to understand is that Treasury bonds are our national debt.
So it is.
These glorified IOUs are to be paid back by you and I and our descendants through future taxation. Therefore, when the government issues a bond, it steals prosperity out of the future so that it can spend it today. The Treasury then holds a
That's called a loan, y'all. That's a loan. That's a loan. It's not income. That is a loan, y'all.
bond auction, and the world's largest banks show up and compete to buy part of our national debt and make a profit on it by earning interest. You'll notice that as we move through this process, the big banks are there, taking a cut every step of the way. This isn't by chance, as you'll see shortly. Then, through a shell game called open market operations, the banks get to sell some of those bonds to the Federal Reserve at a profit. To pay for the bonds, the Federal Reserve opens up its big old checkbook and writes bad, bogus, counterfeit checks that should bounce because they're drawn on an account that always has a zero balance. There isn't one penny in there. To quote from the Boston Federal Reserve, when you or I write a check, there must be sufficient funds in our account to cover that check.
Yes, sir.
But when the Federal Reserve writes a check, there is no bank deposit on which that check is drawn. When the Federal Reserve writes a check, it is creating money. The Fed then hands those checks.
So hold on. So hold on. So this is from the Boston Federal Reserve, from the Fed themselves in Boston. I want you to pay attention to the last sentence. When the Federal Reserve writes a check, it is creating money. What are they writing the check for? For the bond. What's the bond? It's a glorified IOU. What's a glorified IOU? It's a loan over a 10-year time frame, and you pay interest on it. Money is debt. It's debt. It's debt. Let's keep going. Well, we're not done, y'all. We're not done.
Federal Reserve writes a check. It is creating money. The Fed then hands those checks to the banks, and at this point, currency springs into existence. The banks then take that currency and buy more bonds at the next Treasury auction.
More debt.
But what is a check? A check is also an IOU. When you write a check, you're making a note that says, here's my IOU for cash. All you have to do is go to the bank and pick it up.
So stop right there. So now we have two forms of debt. We have the IOU and the bad check. That's two forms of debt. Before the money even hits your hand, right? A business's hand. From the get-go, we have two forms of debt here. Because it's a bad check, right? That money's coming from somewhere. And there's a first IOU called what? A bond. And it is a loan. We're not done. We almost done. Hold on.
Now, it's very, very important that you understand this process because we're going to come back later and show you the devastating effect this has on you.
So recap. Here we go.
The Treasury issues IOUs, bonds. The banks then buy those IOUs with currency. The Federal Reserve then writes IOUs, checks, and hands them to the banks in exchange for the Treasury's IOUs, the bonds. And currency is created. So what's really happening is the Federal Reserve and the Treasury are just swapping IOUs, using the banks as middlemen, and abracadabra, presto, currency magically springs into existence. This process repeats and repeats over and over again, enriching the banks and indebting the public by raising the national debt.
That's why, we have a national debt, guys, because why? Money is debt. That's why we call it a debtor nation. We are a leverage-based system. From the top down to the bottom of the system, it is all sits on the foundation of debt/leverage. Okay, let me say it again for the folk in the back row. Money is debt. Got it now? So if you're playing the income game, trading time for money, right? Not understanding how money works, you are working for debt. Why do you think that they created a credit scoring apparatus? Why do you think when it comes to the Fed cutting rates, there's a lot of talk about how the Fed cutting rates? Why? Because this whole engine runs on originating of debt over and over and over again at the federal level, at the free market enterprise level. That is what's going on the whole time. Make sense, guys? Money is debt. Leverage is the key. If you want to begin to flourish in this system, learn how to leverage properly. Why? The entire system is predicated upon leverage. So, learn how to leverage properly. All right? So, we got that. So, now we got the foundation, all right? The second one. All right? Now, here is the big thing about it is we have a $37 trillion issue right now, right? That's what we have right now, $37 trillion issue, right? So, how can the government stop this ticking time bomb or delay or kick the can down the road? Because we have $37 trillion in debt. It's actually higher than that, get it, guys, because in that total, right? Medicare is not in that total. No, neither is Medicaid or Social Security. They're not at all in that $37 trillion figure. It's actually higher than that. A lot higher. Probably 10x higher. Why? Because money is debt. So let's look at, I have to make sure that I actually wrote this out. So we understand that President Trump did something here real fast. Let's bring him in my partner PBD real quickly, Patrick David. And we know what happened when it came to President Trump, right? President Trump. Let me bring it real fast. All right, here we go. President Trump. He comes out, guys, and passes the Stable Act and the Genius Act. But I want you to pay attention to what happened before he did this, right? Watch this. Here we go. Let's dive into this.
Something very strange happened with a post that the president made about cryptocurrency. That's like, if this happens, what else are you going to say? This could be exponentially explosive. Because when we go to the past and we're like, well, remember when we were skeptics about Bitcoin?
It's ridiculous.
Basically virtual currency, the same that you get for blasting aliens in a video game.
Well, you know, Hal Finney and all this stuff, cryptocurrency, and then you're like, Julian Assange in 2011, 2012 accepts donations in Bitcoin. What? Why would he accept Bitcoin? He does. Winklevoss twins, they like Bitcoin. Yeah, those are the Facebook guys, right? Yeah. Richard Branson likes Bitcoin. Richard Branson, Elon Musk in 2014, first time he tweeted about it. Then in 2020, 2021, he bought $1.5 billion of Bitcoin with Tesla. Bill Gates initially said good things. Now he's critical about it. Then you think about institutions when they came in. 2020, MicroStrategy buys $250 million of Bitcoin. What? Why would he buy so much Bitcoin? Then Morgan Stanley. Then others started getting involved. Then BlackRock starts a Bitcoin ETF. 150,000 Bitcoins they buy. Dude, if all of these guys are now looking at this, maybe I ought to consider a little bit of my portfolio being tied to cryptocurrency. And then the president puts this on Truth Social. You ready? President Trump on Sunday announces that he wants to establish a crypto strategic reserve for the US government, kind of like Fort Knox with gold. We're talking crypto. That will include things like Bitcoin, Ethereum, XRP Ripple, Solana, and Cardano. Whoa. The government wants to have a strategic reserve of cryptocurrency?
Yes, sir.
They do. What's left after that? Is this a way of saying confirmation at the highest level that you ought to maybe consider getting into it? Maybe. We're going to talk about that today.
So I want you guys to pay attention to that up front initially, all right? He goes a little bit deep into that, guys, and you're welcome to go look that up. It is called Trump Announces U.S. Currency Reserve. It's on Valuetainment. Phenomenal. Subscribe to the channel, right? Phenomenal phenomenal content. I think one of the best on the planet, guys. Again, so Trump announces the U.S. crypto reserve through the Stable and Genius Act, right? That has passed, right? Now, why would Trump want to do this? I've said before in the past, guys, that there's two of the most important cabinet picks that Trump has ever done were two men for his agenda, right? Number one, Secretary of Treasury, Bessent. Number two, Secretary of Commerce. Now, why are these two gentlemen so important to the Trump agenda? Simple. They've amassed tremendous amount of wealth in one industry, cryptocurrency. Hello. Get this, guys. We have a $37 trillion ticking time bomb. It's higher than that. Let's say 37. It's really around like 300 plus trillion dollars that we have in debt, but I digress. $37 trillion, right, in debt, right? And there's no sign of Congress, who has the power of the purse, the House, no matter if it's Democrat or Republicans, to stop spending. There's no sign that's going to happen. None. Not one sign. So what do you do? Well, you have to begin to kind of digitize the dollar. It's called modern monetary theory, right? And both the Democrats and Republicans talk about it. I'm not going to get into MMT. No, I'm not. I want you to focus on the digitization of the dollar or of a currency, right? Specifically cryptocurrency, right? Why is that so important? Now, watch this. There was an announcement that was done, right, on CNBC, right? They actually came out and made an announcement real quickly. Boom, here we go. Let's dive into this announcement real quickly. This is just shortly after the President Trump and his announcement. All right, guys. Shortly after that, let's dive in this real quickly. Let's get into it. Here we go.
We're back with some news on the housing front. We'll go to Washington. Diana Olick has that for us. Hey, Di.
Hey, Scott. Yeah, this is from the FHFA director, Bill Pulte. He is the conservator of Fannie Mae and Freddie Mac. He just posted on X, after significant studying and in keeping with President Trump's vision to make the United States the crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency as an asset for a mortgage. Interesting, in the note, he then has a release from the FHFA, whereas cryptocurrency is an emerging asset class that may offer an opportunity to build wealth outside of the stock market and bond markets. Cryptocurrency has not typically been considered in the mortgage risk assessment process for the mortgage from mortgage loans delivered to the enterprises without converting that cryptocurrency into dollars. So he is now, this is not happening immediately, but he is directing Fannie Mae and Freddie Mac to prepare proposals for consideration of crypto as an asset for reserves in their respective single-family mortgage loan risk assessments. So that means that your crypto can back your mortgages. Now, this is an interesting play because there is actually a startup company called Milo, which already does this, and it's been slowly moving into the mortgage market in that way. Some people buy and sell in crypto on their own. But for Fannie and Freddie to use crypto as a backstop for their mortgages, that's going to be interesting going forward, as we know how volatile crypto can be.
So now, guys, what we're seeing is we are seeing something happen pretty drastically here. We are seeing that over a couple of weeks ago, me and Cliff have been talking about, from an investor standpoint, you actually have institutional lenders using cryptocurrency to issue out mortgages. Now with this new information under the Trump administration, right, for Fannie and Freddie, now it's now coming directly from, not just from the investor side, right, but for the retail side, to the average Americans themselves can now use cryptocurrency as an asset on their books, so that banks can then count that as an asset for them to be able to become more lendable to. Debt. Again, money is debt, right? Money is debt. Our whole system is a debtor nation, right? So therefore, it makes more sense for a lending standpoint for the federal government to bless it, like they've done with Stable Act and Genius Act, right? And also say, bring that type of mentality to Fannie and Freddie, right, who actually backstop retail mortgages, right? And says, you know what? Borrowers can now count cryptocurrency as an asset, just like your 401k, just like your IRA, just like your Roth IRA, just like your 403b, just like your life insurance, right? Your cash value life insurance. Now, cryptocurrency, like real estate as well, it's now counted as an asset. Why? Because it makes the borrower more lendable to. Again, money is debt. It's debt. All right, guys. So let's keep going, guys. Now, let's bring in someone else right now, and then we get into the main course. All right. So cryptocurrency for this. Now, here's another video I want to bring you guys into, guys. Is this here? Is what I want you guys to understand is I want you to, let me go I'm gonna get ready real quickly here, guys, is how this type of scenario, if you're not ready, it's coming. It's here, guys. It's here. I don't know what's going on with my computer today, guys, but it is what it is. Here is a video of, again, how you can leverage cryptocurrency for mortgages. Here we go.
Out $900,000 from the financial institution.
1 second. Let me go back. My bad, y'all. Here we go. Boom, let's get it.
10 years time, you've got $1.8 million sitting in Bitcoin. You can now borrow up to 50% of the value of that Bitcoin. So you could borrow out $900,000 from the financial institution. And here's the benefit with doing that. One is you're not selling the Bitcoin, so you're still going to keep exposure to the market because it could still go up. And as you can see over that up to 20 years, it's going to go up to $32 million. Wow. So why would you want to sell the 1.8 million and miss out on the potential gains? So you keep the Bitcoin, and by keeping the Bitcoin, you now don't have to pay any capital gains tax. And by borrowing the $900,000 or up to $900,000 on that Bitcoin, that is a loan. So that is now not treated as income. So again, it's not a taxable event.
Stop right there. Guys, do you see what is going on, guys? Do you see what he talked about leveraging Bitcoin because a Bitcoin is an asset. It is an asset that is going up in value. And what he's saying is you can use the Bitcoin, guys, to number one, you can leverage the Bitcoin at 50% LTV. Banks will give you money at 50% LTV of the value of the Bitcoin. Take that money out, pay off a mortgage. Or take that money out, put out a down payment. Because why? You're leveraging another asset. I get debt. Money is debt. Debt. How's Elon Musk, Bezos, Jeff Bezos, Rob Johnson, Michael Jordan? Go down the line and name any Sam Walton. Name any multi-billionaire or mogul, past, present, and future. What's the one thing they actually had that they mastered? Learning how to manage good debt, because the system is a debtor nation. It's debt. Money is debt, guys. All right. Now, why is this so important? I'm zooming through this. Why is it so important, guys? It's real simple. It's real simple, guys. It's because we got a problem right now. We are $37 trillion in debt, right? It's higher. We got a problem right now. There's $37 trillion in debt. Now, could it be that Trump is playing chess with the finances, right? But using crypto as his Trump, pun intended, piece. Because when Biden sanctioned Russia during his term, right, it turned the commodities industry from a global standpoint into the Wild Wild West. You begin to see Russia and China basically exchanging goods for their own currencies, specifically oil. Right? You had Germany doing the same thing with Russia. Russia's biggest export is oil. You begin to see all this. Saudi Arabia would begin doing the exact same thing. Right? Then you saw China making a global move on kind of dodging sanctions from the United States, right? And setting up a CIS system. If you don't know what that is, guys, go onto my YouTube page, look up China and CIS. I did a whole episode on this thing. Real simple. It is a system that China was actually doing to bypass the SWIFT system so that they would not, so that U.S. sanctions would not hurt them at all. And they were far along with it. Trump gets into office now. He sees what China's doing. I got it. No problem with it at all. I'm seeing that the dollar's getting weakened because of inflation, number one. Number two, on the global stage, realistically, yes, most countries are still buying oil in dollar, but some are not. So you're seeing the dollar lose its place in value. So what do you do with that depreciating value asset right now, which is what? The US dollar. You inflate it away. Because why? The government's not going to stop printing at all. And the dollar's losing its value. So what do? You inflate it away. Now, why would Trump use cryptocurrency to do this? I'm glad you actually asked. Let me bring it in real quickly, guys. This video in, guys, and then I give you my take as well. This guy, he breaks it down as simple as we can, right? And we're gonna listen to what he has to say about this. How the U.S. government is planning to inflate the debt away. Yes, they are. Let's get into it.
So at the recent Eastern Economic Forum in Russia, one of Vladimir Putin's closest advisors said something that got a lot of attention.
What did he say?
Америка прямо сейчас пытается поменять правила на рынке золота и криптовалют. Вспомните, какой у них долг. 35 триллионов долларов.
He said, the United States is preparing to use crypto and stablecoins to secretly devalue its entire $37 trillion debt.
Загоняя всех куда? В криптовалютное облако. Со временем, когда часть госдолга США будет размещена в стейблкоинах, США обесценит этот долг.
He says the United States is plotting to put that debt into a crypto cloud, which would reset the system, basically leaving the rest of the world just holding the bag. Now, this might sound like some crazy theory, but a version of this story has been said before by billionaire CEO of MicroStrategy, Michael Saylor. He actually advised President Trump to, quote, dump all the US gold and buy Bitcoin.
Dump your gold, sell all the US gold, buy Bitcoin, then the trade is free because you could buy 5 million Bitcoin for the cost of the gold. You will demonetize the entire gold asset class, and our enemies hold gold in their banks, so their assets would go to zero. Our assets would go to $100 trillion, and we would control the world's reserve capital network as well as the world's reserve currency network.
The $37 trillion question, though, is how realistic is this, and would this actually work? Because I think the answer is, it's not just going to work. It's going to be inevitable, and I think it's going to happen. Not exactly in that way, but that's what I'm going to help explain in today's video. I want to show you.
So again, guys, is it going to work? It's inevitable. Is it going to work for America? Yes. It's going to cause a lot of pain for other countries, though, because you have China and other countries buying a lot of gold right now, and a lot of them actually hold a lot of U.S. debt. Well, when the U.S. and you have Russia saying this on camera this month in September, right? September the 6th, the U.S. is planning to devalue their dollar by using stable coins, cryptocurrency, right, on the crypto cloud, and basically inflating their debt away, which means the U.S. debt that other countries have, right, are worthless. Then they went a little bit further. Another gentleman, one of Trump's advisors, right, was talking about even doing that with gold, because why? The two assets that the world holds is the U.S. dollar and gold. So he's saying digitize everything. Now this gentleman is a multi-millionaire, damn near billionaire in cryptocurrency, right? So that's what he's talking about doing. But do you see why banks, the U.S. government, right, and investors are utilizing cryptocurrency as an asset? It's inevitable that all currency will be digitized. All of it will. All of it will. So this is modern monetary theory, which means you inflate the debt away. Is it dangerous? Yes. It is dangerous. Can it work? Potentially. Potentially. But here's the question that I really want to ask, guys. how will this flip the real estate market? Well, simple. What'll happen is you have banks will lower their standards, right? Because you're able to add an asset, a cryptocurrency, to it. Now, when I say standards, I'm talking about qualifications per paper, not 2008 type of stuff. No, none of that. But they may lower the DTI, raise the DTI ratio a little higher, right? Because the cryptocurrency can be used as an asset. So therefore, you have more assets to show on the application to justify the loan. Because what's happening is the mortgage from the retail standpoint and also from the investor standpoint, they're originating these loans, but in selling them on the secondary market immediately. On the retail side, they're selling them to Fannie Mae and Freddie Mac. So they're underwriting it to sell that immediately. And on the investor side, they're selling it to investor funds, right? A lot of these are mortgage-backed securities. So whenever a bank is giving you a loan, 9 times out of 10, they're not that loan is not on the balance sheet. It's not. They sell it immediately. They do. They're underwriting to sell, and they make origination points. So I mean, if they're making $2,000, $3,000 a file, right? A file, and they're making $3,000 a file, and they're doing 100 files a month. That's $300,000. If they're doing 1 million files a month, that's $3 million in fee revenue without having an asset on the balance sheet. But then what they do is they then have a sister company which they actually own that services the debt. So they make their revenue, ongoing revenue, on the servicing of the debt. Banks do not want to be in the real estate business. They want to be in the origination and servicing business. So that's it. That's it. Why? Because that is revenue without the risk of having the asset. Make sense, guys? So how can we as investors begin to use this type of debt pivot? Simple, guys. We become more bankable, better credit score, better cash reserves, and own some Bitcoin. Simple. Become more bankable, which positions you to be able to get a higher LTV, right? Lower interest rate if needed, right? Better financial terms. And if you do a JV, you can actually attract JV partners in this so that you can bring the experience and the balance sheet as well as the cachet, and someone can bring the deal to you. Now you've made a business a small private equity business. In other words, someone's bringing you a deal and you fund the deal. Very simple, not hard. Guys, to me, this is a game changer because if done correctly, you can do a lot more business the right way. But I implore you, please have a mentor. I'm going to do a real estate live on the top 5 real estate investors that you should be following, excluding me. Right, excluding me. I'm one of them, but there's 5 guys that I think you should be following, and I'm gonna do one, and I'm gonna let you hear their content. It's gonna be free marketing for them. My whole thing is get you to front-end information as fast as possible that you become a better investor, so that you can actually begin building wealth that lasts 2, 3, 4, 5, 6, 7, 8 generations. And I'm also going to bring on one person that I've met. He's probably one of the wisest business structure guys and leverage investors that I've ever met. He's in Texas. All right. So again, I'm trying to get you information. Now, guys, as we end, guys, again, for me, this is all about getting you the information. How you make money when you buy real estate, not when you sell. Okay, you make money on the buy, not when you sell. The selling is icing on the cake. So how do you guarantee that you actually buy property the right way? Simple, guys. You learn how to locate distressed properties, right? So what I'm doing right now is I'm giving away a free ebook, free, 100% free, of how you can locate distressed properties in your city, county, or state, right? And I go over a technique to where you can actually get a list of distressed properties, whether it's commercial or residential, right, or even some warehousing in your city and county for free. It's in the book. Right there, it's free. It cost you a dime. It's a free book. Guys, how do you get access to it? It's simple. Scan the QR code right there, or DM me the word on any platform, real estate, right? Or on the show notes below, click on the link. Go download it. It's free. No money for you at all. My whole thing is I'm gonna get you the information for free. Now, next week, guys, I have another side also, because I get a lot of DMs saying, hey, Liddell, I don't want to do real estate, but you have anything else you can advise me to do? I got something for you. Don't you worry about it at all. But this is for real estate right now, guys. Scan on the QR code right here, guys. Go download the free ebook. It's free. And if you want to walk through it as well, guys, it will also let you know you can actually hear me and Cliff walk you through this actual ebook, line by line, and go over actual examples of the distressed properties in certain cities. Right there, when you scan those QR codes, right there, guys. Easy, guys. All right, guys. And lastly, guys, this has been really fun for me, guys. Every Thursday at 8:30 p.m., I do a podcast called The Accountable Podcast. It is probably one of my funnest ones because I get to talk about politics a lot more. Love real estate live. I love talking to you guys, but I do love The Accountable Podcast. Here's a little bit of a sneak peek of what we talk about.
Why they party? I'm in here grinding. Money I'm stacking. Why they rock diamonds? I can't relate to them. Ain't my chick calming. I set a goal for me 2 or 3 commas. 7 figures, 8 figures to 9 figures. On a slow pace to get rich quick. Same time we just think different. Cause when you make it, it hit different.
Guys, that's the real estate. That is the Accountable Podcast every single Thursday at 8:30 p.m. CST, guys. And also, guys, within the next 2 weeks, I'll make this announcement right now. Okay? We are relaunching the Cash Flow Club. The Cash Flow Club. What's the Cash Flow Club? That is a club you can actually join with Cliff and I. And what we do is we walk you one line by line of how to locate real estate, and also we will partner with you when it comes to the deal. We'll bring the cash, the expertise, and the balance sheet. Our whole assignment is to teach you how to locate the deal. That's it, guys. It's a cash flow club. There is going to be there's a fee for you to join, because we're only accepting 10 people, just 10. The reason why just 10 guys is we want to make sure that we actually take our time and really teach you the game, right? Really teach you how to locate distressed properties in your city, county, or state. We're talking about apartment complexes, new construction, as well as residential, right? And also, here's a sneak peek one as well, also storage units, and RV parks. We're going all over all things real estate. All right, guys. Our goal is to teach you how to look at the properties, and you have a bank appraiser and GC with me and Cliff to assist you in this entire thing. So when you find the deal, we walk through the numbers, you have the money to close the deal, and it'll be your deal. We just be your silent partner. All right, guys. This is called the Cash Flow Club Real Estate Community. We're just doing 10, just 10. All right, guys. Just 10, just 10 guys. All right, guys. Well, guys, thanks so much for your time, guys. I hope I added some value with you. I've enjoyed going through this whole thing. When it comes to cryptocurrency, I'm gonna dive a little bit more deeper in that thing next week, guys. All right, guys, a little bit more deeper, guys. But guys, anyways, thanks so much for your time, guys. God bless you. You know I end it every single time, guys. Before you leave, while you can, but you see that thing, baby. Take that damn picture and give it to my man. Holly Spider. God bless you guys. See you next week, guys. All right, y'all. Peace.
Walk me through everything, but let's start from the beginning. How'd you get into this space?
Well, when I was 17 years old, my Uncle Gary, who still lives to this day, introduced me to a concept called passive income.
Okay.
And I said, "Oh, Uncle, what's that?"
Yeah.
He said, "Something that you do one time, but you get paid over and over again." I'm like, "Why am I trying to go to college? I want to know how to do that." Gotcha. And so while I was in college, I began to look at business models that generated passive or residual income. One of them was real estate because everybody and their mama actually had it, from Robert Kraft, Jerry Jones, all the billionaires actually had real estate in their portfolio. So I began buying real estate while I was in college. The first deal that I did, I made $3,500. And in college, that's a big time. In college, you broke.
For sure.
College.
For sure.
Then I went from $3,500 to $10,000 to $26,000, and now $35 million worth of real estate. For me, business is always about solving someone's problem. Whenever you're buying a real estate transaction, the one thing I look at is, what's the pain point? Why you want to sell for? And typically, I like buying properties below wholesale. I never buy properties at retail. That didn't make sense to me at all, because I'm planning for the worst case scenario. Each and every deal that I actually acquire, I actually take home cash when I actually acquire it. Wow. Every single time.
If you wanted to know how successful real estate investors make money with their acquired real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holla at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.